What are leasehold improvements and depreciation? Have you ever wondered how businesses manage the costs of making a rented space their own? Let's talk about leasehold improvements and how depreciation plays a role in this process. Leasehold improvements refer to the modifications made to rental properties to meet the specific needs of tenants. These can include things like new partitions, flooring, or fixtures that enhance the functionality and value of the leased space. The ownership of these improvements is essential when it comes to tax implications. If the landlord retains ownership of the leasehold improvements, they can depreciate these assets over time. This depreciation can lead to significant tax benefits, especially if the improvements are disposed of at the end of the lease. On the other hand, if the tenant pays for and keeps ownership of the improvements, they can also depreciate the costs according to tax regulations. This allows tenants to benefit from tax deductions, helping to offset the costs of their improvements. Now, let's break down depreciation itself. Depreciation is a method used to spread the cost of an asset over its useful life. For leasehold improvements, the depreciation period is typically the shorter of the useful life of the improvements or the remaining lease term. This means that the costs are spread out as an expense during the time the improvements are in use. In practice, lease agreements should clearly state who pays for and owns the leasehold improvements. This detail affects tax obligations significantly. For example, if a tenant pays for improvements but transfers ownership to the landlord, the tenant may need to amortize the costs over the lease term. Meanwhile, the landlord can depreciate them over their useful life. Recent updates in tax law, such as those from the Coronavirus Aid, Relief, and Economic Security Act, have impacted how certain property improvements are depreciated. For instance, qualified improvement property was eligible for 100% bonus depreciation for assets placed in service between 2018 and 2022. Understanding these updates is vital for both landlords and tenants to optimize their tax strategies. Staying informed about depreciation rule updates is essential for effectively managing leasehold improvements. This knowledge helps taxpayers navigate the complexities of tax law and ensures compliance while maximizing available tax benefits. So, whether you are a landlord or a tenant, understanding leasehold improvements and their depreciation can lead to better financial decisions.